Welcome everybody to our 23rd episode of Bay Area Housing Market Town Hall. Our Bay Area Housing Market, we always have it recorded and then posted on YouTube channel. So feel free to subscribe and listen to it again. Let's start with our state of the market first. We are going to be talking about these Bay Area housing prices and the competition level today, and then look at the mortgage rate trends as we do every single month. But we also want to talk a little bit about the COVID-related protection effects, because as you know that we have these enhanced unemployment benefits just expired, eviction moratorium. The federal one, we already saw that stopped already, but then the California is expiring on September 30th. So it's coming up pretty soon. And then we're going to look at the commercial real estate market condition and also, of course, the residential rental market condition. A lot of people have been talking about, hey, I think the housing market has been cooling down. And if you guys had joined us about maybe around May, the month of May, we had talked about the summer. A lot of sellers probably going to put their properties on the market, and then, but at the same time, a lot of buyers are traveling for their summer vacation because of the vaccination. So a lot of people are actually not looking, but let's see how the market has done so far. So all these news has been talking about shockwave is going to come to the housing market, is cooling, and whether it's still worth investing. And even Redfin CEO had talked about slowing growth in the pending home sales. But when we look at Santa Clara County, this time I'm comparing 3 months. So it's basically right in the summer, June, July, and August. As you see that the closed sales, it did go down from 1,322 units down to 1,227 units. And last month down to 1,107 units, while condo and townhome, it also had come down from 627 units all the way to 534 units in August. So it has been going down every month. But if you look back in June here, actually it had gone up. But as soon as summer started, it had come down steadily. And but then and if you compare to a year ago, surprisingly, the number is still up. Actually, it was 65% more than 1 year ago. So if we're looking compared to last year, the number of units sold is actually still higher than last year. Now, in terms of the median price for single family went from 1.7. I know Chad is probably a little bit shocked to see these numbers, but our median price for single family was 1.7 back in June, and in July it went down to 1.655, and in August went down to 1.65. As the condo and townhomes, actually their pricing had held out pretty well. So it went down 1.7% last month in July, but it came back up 1.7%. It's kind of even out. But compared to a year ago, still had gone up 10.9% for the condo and townhomes. In terms of the days on the market, it did stay on the market slightly more, but it's not too bad. It's still about 2 weeks. And then for the condo market, it's also staying pretty consistent compared to the last 2 months. And let's take a look at San Mateo County. Now, San Mateo County, if we look at June, July, and August, same thing. We see that single family homes, their pricing has come down a bit from 2.09 million and down to 2.01 in July, and in August went below $2 million to 1.85 million. It actually dropped about 8.1%, but it stayed about 16 days on the market. Still about 2 weeks. It's not too bad. But it did have a lot less property sold. It had 466 units compared to 550 units back in June. In terms of the condo and townhomes, that's a little different. You see that it's very interesting. For this last 3 months, condo and townhomes, the pricing have been holding up pretty well. It was 958K in June and went down a little bit to 922,000 in July, but came back up to $988,000 in the month of August. And as a matter of fact, it did stay on the market for 22 days, slightly less than month of July. And we have more sales in terms of about 191 sales in August compared to July, 154, and also 187 in June. So both in San Mateo County and Santa Clara County, for the condo and townhomes, they're actually doing pretty well, staying pretty steady, while the single family residents have come down in pricing. One of the reasons it could be because most of the single family home buyers, they probably have little kids and they, summer, so everybody, the whole family go on vacation, so have less people looking. So that could be one of the reasons why the price dropped a little bit more on single family. But now that the school has started, a lot of families have been back, and we do foresee that we're going to start seeing more families coming back out to look at homes again. In terms of what we have done as a team, these are some of the offers that we have made in the month of August and beginning of September. As you see, that it's still quite a bit of multiple offers. However, I think last month, if you look back in last month, we have quite a lot of double digits over here. But this month, we have more or less single digit number of offers. As a matter of fact, literally right now, as we speak right now, we are bidding. Well, I have my partner to help me out. We are submitting a counter offer back to the seller, competing with quite a few other buyers right now, and it's going probably about $200,000 over asking price. The competition is still there for sure. So just want to give you guys a sense, like, on the East Bay, these Fremont and Newark, these are East Bay townhome and single family. And you see the townhome, we have 7 offers here and have gone over 1.575. And as for Newark, it's $900,000 asking. Actually, only got 1 offer, but still went up about $100,000. And Piedmont, this one actually asking price is right under 1.5. It didn't even hit the offer deadline yet. Already received 3 preemptive offers and accepted at $1.9 million. And the Silicon Valley area, as you see, San Jose, Mountain View, Sunnyvale, same thing. We still see multiple offers, and also the price have gone up quite a bit. The market is still really hot, even though it was summer, but we definitely have seen less offers compared to the month of maybe April or May, around there. Now, what about the mortgage loan situation? This is exactly the same as last month. It didn't change. I've been changing these numbers every single month. Finally, all 4 organizations, they are staying put with their projections now. So Freddie Mac, Fannie Mae, Mortgage Bankers Association, and National Association of Realtors, they all stay put with their projections. We see that they are still going up slightly throughout the quarters to 2Q 2022, but it's not really significant in terms of the increase. So we are looking at probably around 3.1% on average, the 3Q 2021, and then 4Q will be 3.3%. And then next year, we're going to start seeing 3.4 to about 3.6%. So I had asked my friend from Wells Fargo to share with me their rate for today for Santa Clara County. As of today, their high balance loan conforming 30 years fixed is at 3%. And for the jumbo loan, 30 years fixed is at 2.75%. It's still really, really good rates right now. So if you guys are still looking, definitely try to check out, you can now compare the rates that you have gotten. We've been doing a lot of business with Wells Fargo for sure, and they've been providing really good rates, but it really depends on your personal situation, your credit score, your debt to income ratio, et cetera, and your also amount of down payment, of course. So the rates can fluctuate. So this is just a guideline to let you see what they're offering right now. All right, so let's talk about the COVID pandemic benefits that have been expiring one after another one. I think it's been pretty nerve-wracking for a lot of people, especially the ones that are relying on these benefits. So one is that the California Eviction Moratorium is going to expire soon, September 30th. 2021, in just about 22 days. So I think a lot of renters are very nervous about it. A lot of landlords are very nervous, wondering what they can do if this is the time that they can really start filing for eviction and what will happen. If you guys have come to one of my past webinars, we had talked about like the eviction moratorium, what will happen when it expires. As you know, the California's eviction moratorium had extended over and over again. And then this time they are not extending it. At least we haven't heard anything yet. They are sticking with September 30th for now. What we worry is that there's going to be a backlog, huge backlog on these eviction filings. So what will happen really after this? That's what a lot of people are wondering. And these are all the counties in California where you can take a look at how many evictions have been filed so far. It's very interesting how you see some of them are like 0 evictions filed, and some of them have hundreds of them. You will notice that as the certain counties or certain areas, cities have more strict local eviction rule, then you'll see less evictions. And this is nothing to tell you good or bad, but it's just for you guys to take a look at. And in Santa Clara County, as you see, there are 530 evictions right now, and the average is about 8 evictions per 10,000 households. So it's still relatively low. But at the same time, so you might be wondering, like, I thought there's no evictions at all. There are still some rules there that allowing landlords to evict if they are moving into the property, or they're doing major renovations, or if the tenants had violated the lease, or they have some criminal activities on the property. There are still ways to file for evictions, but then of course depends on the local rules. Some areas a little bit more strict than the other. So this is just a chart to show you guys that there are still evictions being filed right now in these counties. A lot of people are worried about these eviction moratorium, but I'm not sure if everybody knows that there is this rent relief program provided by the California state, and this is by the federal funding. So in California, they had given $5.2 billion of rent relief program where you can actually apply. Both renters or the landlords, they both can apply as long as the renter situation fit the criteria. So really, we really encourage the landlords and the tenants, try to go to housingiskey.com to find out more information whether you qualify or not. And then the second thing is the enhanced employment benefits is expiring over the Labor Day weekend. So that's another hot topic right now. The pandemic, really, the safety net is going away. So a lot of people are really worried. Literally, there are 8.9 million people will not get any more employment benefits after this program expired. And another 2.1 million people will see a reduction by $300 a week on their unemployment benefits. But good news is that even though they're not getting the employment benefit, hopefully that because we have this record of job openings right now, we have 10 million open jobs in the US, the highest level ever. So hopefully some of these people will be able to find jobs, because if you talk to any restaurant owners, a lot of small business people, it's really hard to find people to work. So I hope that even though it sounds really bad that these employment benefit is affecting a lot of people, but seeing the fact that we have so much job openings, that will be actually helping people go back to get a job. This is the $5.2 billion rent relief program. So if we look at this, we have 491 million that has been funded. That's only 9% of the 5.2 billions that have been utilized and awarded to people. So my point earlier was that I want to let you guys know, if your tenants or landlords, or if you know somebody who need help, please ask them to go to housingiskey.com to apply for the funding, because there's money available. But there is a backlog, of course. It goes pretty slowly, but knowing that there is actually money available. So don't be afraid to try to apply for one of the $5.2 billion. It could be yours to help you out in your situation. And then now what's covered? This is what's covered. Landlords who participate in the COVID-19 rent relief program can get reimbursed for eligible renters' unpaid rent dating back to last year, April 1st, 2020. And same thing for renters whose landlords choose not to participate in the program may apply on their own and receive assistance for unpaid rent dating back to April 1st, 2020. I think this is huge. And I hope that we can help the landlords or the tenants to get some rent relief. My apartment buildings, we have gotten it. We are not in California, however, but still we have participated in some of these rent relief program, and it definitely had helped out a lot. All right, let's take a look at the commercial real estate market. There are a lot of different asset types. There are multifamily, there are warehouse, office, luxury hotel, grocery anchored retail strip, office suburban area, unanchored retail, and also airport highway hotel. But I know there's just so many that it's very confusing, but I kind of wanted to just highlight a few of them. Mostly is the multifamily, as you see the core business district. Their cap rate, class A cap rate is 4.65, but understanding this is national average. So it's not, if you go to the Bay Area, it's going to be 3%. Right. And the suburban area is at 4.94% and class B is about 5.34. So you see that there is a little bit about like 35 basis point difference. A warehouse at around 5% cap and the class B would be 5.69. And then office actually has gone up a bit on the cap rate. But what I want to show you is really about these news regarding the returning to the office. As you know, that the Delta variant has become a lot more serious than a lot of people had expected. So now many companies who initially had agreed to like, everybody come back to work in October, come back to the office in October, now they get pushed out to some of them out to, I think, January of 2022 and some even February 2022. So some of them like Apple, Google, Facebook, Amazon, and quite a few other companies as well. However, I think a lot of people keep saying that they think people are not going to go back to the office. Right now, they are not going back is really because of the Delta variant, of course, and now they have another variant called Mu. So we hopefully, when the situation get under control, it'd be great. But then this is saying that nearly 2/3 of the more than 200 companies responded to a mid-July survey in the tech-centric Bay Area said that they are expecting their workers to come into the office 2 or 3 days each week. So what it's saying is that even though there are a lot of people saying like, hey, I think working from home is working out, and they do agree, however, they are still asking people to come back into the office 2 or 3 days each week, which means that these companies, they make it very clear they want most of their workers together at least a few days a week because they need to maintain the culture and the pace of innovation. They do believe that when people are together, they can innovate better. So I know there are a lot of people talking about moving out of California. Chad, you might heard of that too, but at the same time, we do see that, a lot of companies are actually requiring their employees to stay somewhere around at least so that you have to come back into the office 2 to 3 times a week. So I thought that is interesting to look at because that has direct impact to the office market. So if you look at the office market in San Francisco and also Bay Area in general, the change in the vacancy rate is quite a bit. In April, the vacancy rate is at 14% for San Francisco and 19% for the Bay Area. The vacancy rate definitely has gone up quite a bit across most of the metro area. Although I had mentioned also a few months ago, back in April, we started hearing a lot more companies coming out to look for office space. At that time, of course, we were a lot more optimistic about this, COVID situation or pandemic. We really felt like, hey, vaccination, they came out, so it will be a lot more optimistic. But unfortunately, just this past month, we kind of regressed back. So we do see a little bit less activity again back in the office market. So we just want to keep you in mind that this COVID pandemic really have a lot of effect on the office market. However, it doesn't have a lot of effect in the industrial market. And this industrial has been doing really, really well. Pretty much across the board, and especially on the West Coast area, as you see that the top 10 markets, most of them, 1, 2, 3, 4, 5, 6 out of the top 10 markets, they're all on the West Coast, including the Bay Area. So industrial market is still doing really well, and their rents actually had increased. And the other really strong asset types during this pandemic will be apartment, industrial, and self-storage. Marcus Millichap had done a video to talk about the impact of the COVID pandemic on different asset types, and apartment, industrial, and self-storage have done the best during this time. And it's real interesting that I think a lot of people, even including myself in the beginning of this pandemic, I thought it was going to be really bad. But for apartment, actually, it's still going really strong. There are still multiple offers, although their offer is not as aggressive as before, but there are still multiple offers. So it's still a lot of times they're offering maybe slightly below or slightly above, not crazily above the asking price. So just want to give you an idea. Now, in terms of rental housing market, real quick, I think there's something to do with this whole employment benefit expiring soon. As you see that for September, by the 6th, usually you want to track how much payments came in, and we have one of the lowest, 72% only in 2021 compared to 2019 and 2020. If you look at full month results, of course, we only have up to August to look at, but if you see by September 6th, it's really lower than most of all of the other months and all the previous 2 years. So really curious about to see what will happen by the end of September. And that really, I think, is because the employment benefit expired over this past weekend. So a lot of people really nervous. They probably have, they're not able to pay for the rent. And another interesting thing that I want to share with you guys is that Blackstone alone, they have acquired $6 billion worth of single family rental. And then Investment Mint, they also invested $5 billion in single family. Last time we saw this was actually during the last recession. And when we had all these foreclosures, Blackstone came out and bought a ton of single family and kept them as rental. And they're doing it again. And one of the reasons that I believe, and if you look at the homeownership rate, we have gone from 67%, and then in 2006, 2007, we were doing really well because at the time, anyone can buy a home. We used to say that as long as you can breathe, you can buy a home because of the mortgage program. There were 100% financing all everywhere. There were stated income, stated assets, and that caused the whole mortgage crisis, right? And then since then, the home ownership ratio has gone down quite a bit, but it had climbed back up. In year 2020, actually climbed back up in a pretty healthy 68%, but then it dropped back down again. Of course, one of the reasons is because the pricing have gone up so much. So the home ownership rate has gone down. So what it means is that the renters, there are going to be more renters on the market. And another thing is that single family zoning law changes. Here is Senate Bill 9th and proposed that they want to allow as many as duplexes or multiple 2 houses with attached unit or a combination of those up to 4 units to be built on single family lot across California without local approval. Although they say you would not see the wholesale bulldozing of single family homes, but at the same time, they are proposing to allow multiple units being built on single family lots. So that means that if you own single family, it could turn into multiple properties, or we already have a lot of areas that allowing you to do ADU, but building duplexes and up to 4plexes, that's a complete different story now. And here, last slide is that Yardi Matrix, they came out on the report in August and saying that multifamily asking rents increase and it's down 10.3% in August. And tech hub metros that have led the nation in rent growth over the last year and a half continue to outperform. And lastly, they said single family built to rent. The rents continue to grow at an even faster pace than multifamily, with national rents up 13.9% year over year. Occupancy continues to rise as well, up 1.1% year over year. So I thought this is really interesting because single family, if you know me, I usually talk a lot about multifamily, but I have been talking a lot about single family because it has become a very hard to get commodity here. One is that the rent has increased quite a bit. And then if they do pass that to say that you can build multiple units on single family lot, that would really, bring up the price. And then that will cause the home ownership rate to go down. That means there are going to be more renters. So they're just something that to consider. I think right now, besides multifamily, I usually don't really recommend single family to just buying it for rental purpose, because I feel like you're putting all the eggs in one basket. If the tenant move out, you get no income. But right now, because of all these different situations arise, as I mentioned earlier, I feel a single family would be a good asset type to hold for sure. So in conclusion, housing prices continue to go up. It just cooled down a little bit in the summer. The actives are still high, still competitive. Interest rate will remain low, increase very slowly for the next 12 months. COVID-related benefit expired, enhanced unemployment benefit, eviction moratorium expiring, but we still have historical high job openings and also underutilized rent relief programs that need to be used for and help those people in need. And the rental market, office market continues to soften because of the Delta variant, but we do expect it to recover because these companies have already said that they do need their employees to come back to work. And the apartment rent rates continue to remain strong, and single family homes rental becoming a very good rental market because they're growing at a really fast pace. So with that said, this will be a good segment for me to bring in Chad McCall here. Today, I am really excited to have invited a good friend, Chad McCall, to talk to us about his creative ways to help you jumpstart your real estate investments. Thank you so much for watching our YouTube channel. And don't forget to subscribe to our channel, like our videos, make some comments, because we're going to keep you posted on the most updated real estate news, housing market data, and also real estate tips and advice from all over the real estate industry. So thank you so much for watching, and I'll see you next time.